Hello, friends and family. Welcome to another episode of Midweek Tax Help. Sorry, I don't know why I keep saying episode. It's not a TV show yet, but maybe it can be. Who knows? You never know in this day and age. But anywho, I'm your host, the hostess with the mostest, Latoya Tillett, owner of Tax Plus Financial Services. And today I wanted to talk to you guys a little bit, actually gearing this more towards my realtors, my fellow realtors out there, brokers, real estate agents, whatever position that you hold within the real estate industry. I want to talk to you guys today. In particular, because I am a broker owner as well as a realtor myself. And I've been a realtor now for almost 16 years. So, wanted to kind of give you guys a little bit of guidance on different little things that we can write off and different deductions that we can take. And some of these things apply to general small businesses or Schedule C sole proprietor type businesses. So you can take some of these tips as well, even if you're not a realtor. But today I want to talk to all my realtor friends just to, let you know that there are plenty of deductions out there besides just the norm that we hear about all the time. I'll give you guys the basics, but I have a sheet. It's either in Excel format or PDF format that can help you track your deductions so you can make sure you're taking everything that you are entitled to as a realtor when it pertains to pursuing income by either selling or helping buyers purchase homes. So let's go ahead and get started. Like I said, I have the sheets available, but we know, most of our standard deductions are mileage, of course, travel. If we have to travel during our business, we can write off meals and entertainment, client gifts, those kinds of things. Those are some of the basic things that we can write off. So I just wanted to offer to you the list that I have. It's about 100 different deductions that we can take that, we probably didn't even know about. There were some that I didn't even know about for years before, I really just started paying attention to what we can do as small business Schedule C sole proprietors, okay? So, I have that sheet available. If you'd like it, feel free to text me and just text the word realtor to 909-494-2280. Put realtor, your first last name, and your email address, and I will definitely get that form over to you so that way you can see all of the deductions that you may be missing or that your tax preparer may be missing. Because I know a lot of us, we try to do our taxes ourselves, so we may not even know all the deductions that we're entitled to. So definitely want to get that form out to you all to give you, help you out a little bit with this upcoming tax season. So, definitely want to be tracking your mileage. That is the key thing. One of the main things that the IRS looks for on Schedule C small business owners is whether you're tracking your mileage. And when we say tracking your mileage, you're not guessing like, oh, I drove 30 miles this way and then I went back over here. That's not the same thing. We need to know your starting mileage, your ending mileage, and then you take that number in between to write that off. You can also do your gas, your maintenance, and those type of write off those types of transactions, but you have to have documentation to prove all of that. My suggestion would be, depending on how many miles you're driving. I know when you're working with buyers, you tend to drive a lot more miles than you may have to drive when you're working with sellers. Because once you get a listing, you pretty much, you get it, you put it up there, you do your marketing online and everything, or, by direct mail. So you're not doing as much driving maybe as you would be if you're working with buyers. Now, if you're working with buyers, my realtors out there, listen to me. If you're working with buyers, make sure you are tracking your mileage. Try to keep it simple. I know it's a little hard to be writing down when you started, when you ended, and which way you went. So one thing you could do is keep your Google Maps printouts or your what's it called, MapQuest. If you still go old school and print it out, you can use your MapQuest printouts to show your mileage for the day or the days that you're out showing properties. You can also use mileage tracking apps like MileIQ or TaxBot. TaxBot is actually the one I use personally. Not endorsing them or anything, but just telling you which one I use, because you could set it to automatically track your miles, and then you can swipe whether it was personal or business, and then you label it as to what it is. If it was for business, then you can label it, showing, client ABC, homes in Victorville, or, lunch for clients, client gift for, whoever it is. You always want to explain the who, the where, the what, and the why. Those are the key things you want to be able to prove to the IRS in case you ever get audited. And they look at small business owners, Schedule Cs, those type of items on tax returns to audit them, because they know people can exaggerate certain things. Like you may exaggerate the amount of expenses. Hardly anybody ever exaggerates their actual income. Let's just be real. But, with TaxBot, you can actually track your income and your expenses and your mileage. So I really, really like that app because it kind of has everything. And at the end of the year, you can print out a nice, beautiful, clean report, either for yourself if you're doing your taxes on your own, or print them out for your tax preparer. So you have that record. So that way you're pretty much audit proofing your business when it comes to your mileage and your other expenses. Also, don't forget to write off your dues and subscriptions. We have to pay our Realtor dues every year. We have to pay our MLS dues every quarter. Write off those things. Make sure you remember to track and keep all of those receipts. That is going to be the key component to audit proofing your business, whether you're a realtor, whether you're a hairdresser, whether you're a landscaper, whatever it is that you do. If you have a small business, Schedule C or LLC or a corporation, the main key component is to keep every single invoice and receipt, so that way you will know what you have spent throughout the year, because sometimes people forget, or you may misplace a receipt. If you don't track it right away or have some type of system like QuickBooks or something where you can upload a quick receipt into, or put in, hey, I spent such and such, I didn't get a receipt at the gas station, so let me put in here that I spent $20 on gas today for this reason. If you don't have something like that, you could be missing hundreds, if not thousands of dollars in deductions because you're not keeping up with your receipts. Not only do you want to keep up with your receipts just to, in case you have an audit and you need to make proof to the IRS, you want to keep your receipts to make sure you're getting all your just deductions. You don't want to miss out on anything. As small business owners, it is important for us to have a very comprehensive tracking system, so that way whenever anything arises, it doesn't even have to be an audit. It may just be you need to know what your revenues are for the year, because as owners we need to know our numbers, and we need to know if we're making money in a particular area of our business. If you go back and look at your taxes and you see, oh wow, I've been claiming this side hustle, as they've been calling a lot of these businesses. A lot of people started during 2020 or call them side hustles. Anyway, that's a whole nother video. But it's like, okay, I've been doing this for 3 years and you don't see any profit coming out of it from looking back at your taxes. It's kind of time to reevaluate that and find out, like, okay, what can I do better? Is this more of just a hobby? Because the IRS, after 3 years, if you're showing substantial losses in a business, they kind of tend to call it a hobby. They're like, okay, you're not really in this business to make money because you keep having these losses. If they see that the losses don't make sense, certain losses will make sense and won't count against you, like your deduction for your mileage, or deductions for paying your contractors and things like that, paying your own salary, those kind of things. Those are all legitimate expenses and costs. And that way they're seeing that somebody is getting paid and somebody is benefiting from the business. Well, more particularly you yourself. But if you're just having all of these losses and you can't pay yourself and you're barely living and surviving, they're saying, hey, this is just an expensive hobby you created for yourself. So don't do that. Make sure you keep all of your receipts. Make sure you track everything. Make sure you track your mileage, not only for the IRS, but for yourself, to make sure that you can see where you're profiting and where you're losing. And then that way you can make the necessary adjustments you need to become a more profitable business. Because guess what? Paying taxes is not half bad. There's nothing really wrong with it. I know we don't like to do it and we don't like to owe the IRS, but when you owe taxes, that means your business is doing pretty darn good. So, don't shy away from having to ever owe taxes or having to pay. It's really a good thing at the end of the day. So anywho, I just wanted to kind of talk a little bit about that and just let my realtor friends know that I'm here for you. Make sure you always consult your tax preparer or your CPA or your accountant, whoever it is that works on your books. If it's you or if it's an outside company that you hired, of course you want to consult with the outside company that you hired because they have the expertise in these areas to make sure that you are taking the correct deductions. Because the IRS Code 162 says you can deduct anything that is deemed ordinary and necessary for your business. Not for everybody else's business, but for your business. So if your business requires that you have diamond earrings because you're an ear model or something like that, then that's ordinary and necessary expense for your business because that's what you do. And as realtors, we tend to think, oh, we can't write off certain things because it's real estate, or we have to dress nice, we have to look the part. But there are other deductions that are deep down in there that pertain to your business. There's once a real estate agent that purchased a yacht and tried to write off the expense of the yacht on her tax return. This is a case study from one of the mentors that I have. And so she went to write off the yacht, and IRS did an audit and was like, no, you can't write off the yacht. Like, that's not normal. Like, realtors don't just buy yachts for fun. And so she was able to prove that it was an ordinary and necessary part of her business because she sold beach and lakefront properties. So what was the best way for her to showcase these beachfront and lakefront properties was on her yacht. She would take her clients out on a yacht and take them around to all the different homes she had either listed for sale or that were for sale on the market that they were interested in buying. And that's how she showcased them from the water. And so at the end of the day, she ended up winning her audit because she proved that for her particular business, which was her niche, keyword, that was her niche, that was her thing, beachfront and lakefront properties. So she was able to win the audit because she showed for her expertise and her niche, her certification, it was a necessary and ordinary expense for her business. And so make sure you look at that. What I would suggest is, if you're not sure if it's a write-off or a deduction, write down everything you can think of that you spend money on throughout the year. So your realtor dues, if it's magazines, your continuing education, because we do have to renew every 4 years. So you have to do that. So your continuing education, any self-improvement courses that are pertaining to your business, or if you're going for a special certification or a specification, like, let's say you're going for a GRI or SRES or any of the other certification, green designation, ePro, all of those classes and courses that you pay for through the National Association of Realtors or through the California Association of Realtors or whichever realtor association you belong to, all of those classes you pay for are all tax deductible. So keep your receipts or your invoices from that showing that you pay for those courses. If you travel to real estate conferences, make sure you keep your plane fare, your rental car, your hotel, all of those receipts. Keep all of those things together and make sure you're taking those write-offs. If you buy closing gifts for your clients, I believe the general rule is about $25 per client. So make sure that you're keeping the receipts for that as well, and that you're getting those write-offs and getting all the deductions that you are entitled to. Track your mileage. I would say track your gas and your repairs and maintenance as well, because at the end of the year you can compare to see, okay, did I spend more on my gas, repairs, and maintenance than I used in mileage? And then you could take the higher out of those two deductions. Usually the mileage is the highest one if you're doing a lot of driving, but if you're like me during COVID, I didn't have to go out as much, so I didn't drive as much or do as much driving. So, in my case, it may be better for me to take the actual expenses deduction, which is the mileage and the gas and the repairs. So, not the mileage, I'm sorry. The repairs, the maintenance, and the gas. Forgive me for that. It's just so much trying to get out to you guys, so kind of get tongue twisted a little bit. But anywho, I want to keep everything nice and short. So if you want to take a look at my form of all of the deductions that we are entitled to take as realtors, remember to text the word realtor to 909-494-2280. Text realtor, your first, last name, and your email address, and I will be more than happy to share that form with you. I want to make sure you're getting all the just deductions that you were due. You can always consult with your tax preparer or your CPA or accountant to see if there's any deductions you're missing, or you may want to take a look at this form of everything we can write off, and if they're missing something, this is a good way to check your bookkeeper or to check your tax preparer to make sure they are giving you all the deductions, because to be honest with you, sometimes taxpayers, they know the basics, and that's pretty much about as far as they go. They may not know about some of the extra things that we can write off. They may not fully understand or be aware of the extent of the tax code and some of the things that we can do. So you got to check your bookkeepers and everyone too. You got to check your accountants, you got to check your tax preparers, because you don't want to be shorted. If you are entitled to, maybe it's $100 or $1,000 or $2,000 more in deductions by being able to go over the 100 or 101 deductions that are available to realtors, why not do that instead of continually losing money every year? So I have found problems being a tax preparer myself. I have looked over other people's taxes before in the past just to kind of see what their previous preparers have done, and I have found mistakes. I have found that they didn't write off everything that they could have written off. So you definitely want to always do checks and balances with any business. That's what I would suggest. I don't care who you hire, what expert it is. You want to know enough. You may not be a numbers person, or you may not understand the tax code fully, but you want to know enough to know when you're looking at at your tax return or looking at your financial statements, if there is anything missing or if there is more that you could have received. All right, that is my midweek my midweek tax help for you this week. And I look forward to working with you. If you don't have a trusted CPA or tax preparer, bookkeeper, feel free to give us a call on, let's schedule a time to do a mini consultation, just to kind of see what your needs are and see how it is we can help you. Our team is here. We are open and available for you. Remember, tax date is taxes open. The IRS starts processing tax returns on February 12th. And so that's pretty much all I have for now. Oh, before I go, last little tax tip here for my realtors. If you're doing a lot of business, you may want to think about moving from filing on a Schedule C tax return to either incorporating your business or starting an LLC for your real estate business. I know you think that's probably reserved for some of the larger companies or something like that, but you yourself, you can go ahead and incorporate yourself and then put yourself on a salary, and then there you go, you got even more tax savings. So that's another thing we look at too. We can look at your entire picture, your whole business, and just see what will work best and be best suited for your business. Because if you're not doing a whole ton of business, then maybe doing a Schedule C is okay. But when you start getting into, your if you're net GCI and you're making 50, 60, 70, 100 grand or more a year in your net commission income, you may want to think about potentially either incorporating yourself or doing an LLC. And then this way, you can pay your assistant through there. You can pay your transaction coordinators and any other contractors. If you have a team up under you, paying everyone, and then you can get their 1099s processed. So that way you're not taking that huge tax hit on that $100,000 if you paid a team of people to help you get to that $100,000, if you understand what I'm saying. So here at Tax Plus Financial Services, because I am a realtor myself and a broker, I do understand the special needs of my fellow realtors. So we can look at your whole picture and just see what'll be best for you. Maybe it's time, maybe you've worked at this a few years and, you're starting to really show a consistent flow of income. Maybe it's time for you to incorporate or to do an LLC. I know in California, a lot of the brokerages will only pay the commissions to you if you have a corporation, which is a C corporation at that. So definitely check with your brokerage. If that's something that you're interested in doing, check with your brokerage and find out how they can pay a company. Ask them if they can pay an LLC or if they can pay a corporation. They'll let you know, oh, it has to be a corporation or it has to be this type of entity. They will let you know what it has to be in order for you to get paid under your business name. and then you start flowing all that business income, and now you can write it off. And then guess what? I have another tip coming for you, but I'm not going to give it all to you today. But another tip, you can hire your kids and put them on payroll for even more tax savings. But we'll talk about that in another video. Thanks again for joining me, Midweek Tax Help. I'm Latoya Tillett, owner of Tax Plus Financial Services, as well as the owner of Tillett Realty Group. Talk to y'all soon. Feel free to reach out. Bye-bye.